Hello, everyone. Welcome to this webinar titled The R&D Tax Incentive presented by InCorp Advisory. I'm your host, Michael Claro from the Business Development team here at InCorp. Thank you all for joining today. I'm joined by Hamish Sinclair, who's a senior consultant from our government incentives team, who's going to walk you through the R&D tax incentive in Australia and explain how everything works here. Hamish, how's it going today?
Good, thanks, Michael. Glad to be here.
Excellent. So before we get started, I'll tell you a little bit about InCorp Group. So we serve over 15,000 clients. Most of them are international clients. We currently have 9 different locations. So our headquarters is in Singapore. We just jump to the next slide. There we go. Headquarters in Singapore. We're speaking to you today from our Sydney, Australia office. We're also based in Hong Kong, India, Indonesia, Malaysia, Philippines, and Vietnam. So most of the ASEAN countries. And then in addition to this, we've recently established an office in mainland China as well. So we offer a comprehensive full suite service portfolio of business advisory services. So this covers anything to do with setting up and running your company in any of our jurisdictions, including corporation, corporate secretarial, outsourced accounting and finance function, audit and assurance, and here in Australia rather, government incentives, what we're talking about here today. Do have a global reach. So again, serving over 15,000 clients, focusing on market entry services and business advisory, incorporation, corporate secretarial, outsourced accounting, and outsourced payroll, just main services here. And with that being said, I'm going to turn it over to Hamish, who's going to walk us through step-by-step the R&D tax incentive and how to think about a claim here in Australia. Okay, Hamish, over to you.
Thanks for that, Michael. So as Michael mentioned, today I'll talk you through who InCorp Advisory are and our role, the common industries we work with the R&D tax incentive, as well as an overview of the eligibility, both financial and technical sides, before then diving into the R&D expenditure items and then the R&D services that we offer as well. So our role. Well, our government incentives team consists of individuals who have unique qualifications ranging across a variation of STEM industries, such as software engineers or biotech sciences, with our management team having Big Four experience as well. And what do we do? Well, we help clients navigate the R&D tax incentive landscape, provide the best advice available and feedback on R&D and tax incentive eligibility. And we foster a sense of togetherness as well with the client, as we see ourselves more of an extended part of your team than an external consultant. And we undertake and lodge the R&D tax incentive claims for eligible entities. So these are the common industries we work with. This is the top 7. There are a lot more, but if we go from the start, there's the biotech industry, and you've got agriculture and agri-tech, the renewables and green energy, engineering, be it civil, electrical, materials, chemical or food sciences, technology and software, manufacturing and mining. So what is the R&D tax incentive? At a high level, it's a tax incentive for eligible R&D entities conducting R&D activities within Australia with Australian expenditure. We'll explore on the next few slides who eligible entities are as well. For the financial eligibility, the R&D entity must have at least $20,000 of eligible R&D expenditure. And as I just mentioned before as well, all activities and expenditure must be Australian-based. There is an exception to this that we'll discuss later on as well. The R&D tax incentive is administered by 2 regulatory bodies, the Department of Industry, Science and Resources and the Australian Taxation Office. It's applied for retrospectively and at the end of the financial year you wish to claim for, and the deadline's 10 months after that year end. So for 30 June year end companies, this is the 30th of April the following year. And for December year ends, that'll be the 31st of October in the following year. Who are eligible entities? Well, eligible entities are companies who have been incorporated under Australian law and have an ABN as a result of this. Not eligible entities include an individual or sole trader, a corporate limited partnership, an exempt entity such as a not-for-profit. You can't be owned by an exempt entity as well, and trusts are ineligible unless it's a body corporate in the capacity of a trustee for a public trading trust. So over the next few slides, we'll go through the technical eligibility of an R&D claim, but at a high level, to have an eligible R&D claim, you must have a core R&D activity. A core R&D activity is an activity that, with outcomes that a competent professional could not have known or determined in advance, based on current knowledge, information, and/or experience. The outcomes must also be determined by applying a systematic progression of work. So this goes from hypothesis through to setting up and the conduct of the experiments, recording of the results, evaluations of the results, and the conclusions being made at the end. So what does this mean? To best understand it, I'll step you through each aspect of the R&D application form, which is on the slide that you can see in front of you. So the hypothesis at the top there are the results that you aim to achieve, often in a quantitative format that you can measure success or failure against. You have to also be able to explain why you think you can achieve them and succeed. New knowledge is where you have looked at existing technologies, determined the limitations in existing technologies and processes. It's really where you look to improve or go above and beyond what's currently in the industry, and that's likely where your new knowledge is. Having an unknown outcome. An unknown outcome is the technical complexity of the project, whereby you're not really sure if you can solve it prior to undertaking the experimentation. And then we go into the experiments. So this is the section in the application where you describe the test being conducted and what variables you're testing. Then we go into the results and observations and evaluations. So this is where you record the results and from the testing conducted and the evaluation of these against the hypothesis. And then we wrap up with the conclusion. So the conclusion are your final statements summarizing your findings and assessing those against the hypothesis to show whether you have achieved or failed the hypothesized outcomes at the end of the year. There's also supporting R&D activities. So supporting R&D activities are any activities that support the conduct of those core activities that we discussed in the previous slide. The most common supporting activities that we typically come across include project planning and management, any background research activities to determine the current state of knowledge, and supporting tests and analyses to allow for the core testing to occur. So what if there's overseas costs? Can you claim them as part of your annual R&D claim? You're not able to at all. They're strictly not eligible. When it comes to claiming overseas costs, there is one other process you can apply for to claim them as part of the yearly R&D tax incentive claim, and that's through an overseas finding. What is an overseas finding? Well, it's another mechanism that allows the claimant to claim overseas costs and activities once approved. It's a little bit different to your annual R&D claim, and it has to be applied for that year that you wish to claim in. So, for example, if you have a company year end of 30 June 2024, you'll have to lodge the R&D overseas finding application by the end of that year. So for the period of 1 July 23 to 30 June 24. Once you've received the approval for that, then you can lodge it as part of your R&D claim for the following year. That's due 30th of April 2025. Now that we've covered off on the technical eligibility and the high-level financial eligibility as well, what are the R&D offset rates? Well, there's two scenarios, one for entities above 20 million and one for below 20 million. So for below 20 million, the R&D entity will receive an 18.5% uplift on the corporate tax rate. So for example, if the company has a 25% tax rate, you'll receive a maximum of 43.5 cents back for every $1 spent on R&D. For over the 20 million aggregated turnover, you'll receive either 8.5 cents or 16.5 cents reduction in tax payable for every dollar spent on R&D as well. It's worth noting that these percentages are based on the R&D intensity threshold. So this is calculated as a total R&D expenditure of a company over all company expenses. So for all R&D expenditure that is up to the 2% intensity, the company would receive the 8.5% benefit. And for every dollar spent over that 2%, they'll receive the 16.5% benefit. So how do the offsets work? Well, for entities below 20 million aggregated turnover, there's two options. If there are tax losses available, then the entity would fully receive the refundable offset, so cash back. If the company is profitable, they'll receive a partial refund, such that the R&D offset will be first used to pay any outstanding tax liabilities to the ATO, and then the remaining amount would be refundable. For entities above 20 million in aggregated turnover, they'll receive non-refundable offset, and this is used to offset against tax liabilities, and it can be carried forward to the next year if not fully utilised in that first year. So what expenditure costs are claimable? There's four main buckets of expenditure costs that can be claimed, and they can be grouped into contractor costs, salary and wages, direct costs, and selected overheads. It's worth mentioning that to claim these costs, an R&D entity must keep a variety of evidence on hand to show the relation of these costs to the R&D activities. So for example, for contractors and direct costs, evidence can be descriptive invoices, statements of work, and for employees, it can be timesheet documentation or any other documents that shows the duration of time that they've worked on the R&D activity and what type of R&D activities they've worked on as well. And finally, for select overheads. So these can include rent or electricity, for example, and they can be claimed through an apportioned methodology approved by the ATO. And again, you'll require descriptive invoices for these as well. So what expenditures are not claimable? So some expenditure items that we can't claim as part of the R&D claim are charge-out rates for employees, general rates for equipment, and any general business overheads, for example, stationery, accounting costs, printing costs, any office expenses, anything like that that doesn't have a direct correlation to the R&D activities. And associate payments. So who are associates? Well, associates are individuals or businesses who sufficiently influence the day-to-day business operations of an entity, or the individuals or entities who have the majority voting interest in an R&D entity. When can associate costs be claimed? Well, they must be incurred by the R&D entity and physically paid to the associate's bank account to be claimable. Alternatively, if they've only been incurred but not paid in that financial year, they can be carried forward, and once that physical payment occurs is when they can be claimed. There are a couple of funding conditions to consider when it comes to associate payments, and these include round-robin payments and increasing loans. If either of these situations currently affect you or your business, please feel free to reach out to us or your R&D advisor to discuss implications on the claimable R&D costs. So lastly, what does InCorp Australia offer? There's a range of services that we offer for each stage of an R&D claim. There's pre-R&D claim services that we offer, including the overseas finding applications that we discussed earlier, advanced findings, which are binding rulings on a company's R&D activities and whether they're eligible or not. Specific advice around expenditure and overall company eligibility via private rulings, documentation review and guidance. And then we have the assistance with the annual R&D claim as well, as discussed previously. And then we also offer post-claim feedback services with an option for audit simulation as well.
Fantastic. Thanks very much, Hamish, for that presentation. So if you're interested in the R&D tax incentive and learning more, and if your expenditures are eligible, feel free to reach out to Hamish or myself, their contact information here. I would be happy to have a complimentary discussion with you about your expenditures and whether or not they are eligible for an R&D tax incentive claim. Thanks everyone for watching, and we'll see you next time.